India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, we are world champions, and it's a fantastic feeling. India T20 World Cup winners, and what a way to begin this new week, and what a way to begin this July as well. Morning, guys. I don't think I was wondering what to say. I don't think I can really add anything to what has already been said out there, but it's just a sort of feeling of being top.
Emotions are running high, right? I mean, what a game! Everything. It was like a script.
Yeah.
It was like a movie script, right? Everything. From Surya Kumar Yadav's catch to Bumrah's over to just fighting till the end, to the entire team spirit. I mean, I think there was not a better match that I've watched in a very, very long time. So big celebrations continue.
Well, totally pumped up, Sonia as well as Prashant. What a game. Getting into the last 5 overs, you thought this is going to be difficult for us. But the boys came back, put their head down. The bowlers bowled very, very well. And I'll tell you what, I was traveling. I was in Kenya. I was at Mombasa airport. And my flight was delayed by 1 hour. I was thrilled because I got to see the final part of the game. If it wasn't for that, I would miss the finals. And on that small screen out there, me and my kids and my wife were screaming, and everyone at the airport's wondering what's wrong with these guys because no one's watching cricket out there. But what a game! What a game!
It was hearts in our mouths, right? With 30, I mean, we needed 30 out of 30. South Africans needed 30 out of 30, and it looked like it was absolutely doable. And then, of course, that wicket which Hardik Patel took. And
actually, at the start of the game, once the wicket started falling, it was really a hard task, right? I mean, a tall ask to win that game.
We lost a couple of wickets quickly,
but the big player came out then, played that innings. Virat Kohli, give and take everything. He stood up on the day that was counted. A little slower innings, but that counted at the end of the day. And our bowlers,
and that
spectacular.
Catch. What about that catch?
What a catch. Couple they did it in 1983. Like we weren't born at that point of time, but what a catch by Surya Kumar Yadav, plucking it out of nowhere.
Also Bumrah, guys, right? I mean, everyone, there's a lot of accolades that go to the batsmen generally, right? Over the years, but finally, I mean, one of the best in the world, Bumrah, always showing up, always performing, so consistent. I mean, look at that. Just that image is enough, right, for a billion people.
No, I think absolutely. And, we'll sort of continue talking about this one. And it's a great, fantastic feeling to begin the session. We were sort of obviously basking in the glory which the team has got to us, but why not? All right, well, let's put our head down here and talk about the markets now, right? Because we've got a new week which is kicking off, a new month which is kicking off, and of course, we are starting into the second half of this particular calendar year as well. We put the first half behind and we get into the next half. And it's a great way to get into the second half because, and the returns will come up on your screen, it's been a fantastic July. June, beg your pardon. 7% of the Nifty bank, 6.5% of the Nifty. That's about, 1,500 points on the Nifty and about, 3,300 points for the Nifty bank. So this is as sort of, strong gains that you can get for any particular month, and June has given us that. So that's essentially the backdrop. Very sharp moves. Sectorally as well, if you just look at June, the top performing sectors are up on your screen. It's been real estate with a 10.5% gain, private banks with a 8.5% gains. I mean, so June basically was the month when people started to talk about private banks starting to participate. And of course, IT services, which was up almost about 7.8%. First off the block in terms of earnings. And I think with expectations running high that maybe Q1 will be a little better, there is positioning which is already built in many stocks. Now, positioning essentially is what we've been highlighting for the last couple of days as well. And these are the two numbers which tell you the swing from extreme to extreme. I remember around the time when we got, extremely negative positioning, and then, of course, the election result and the market came out of it. we were discussing how sometimes off of very, very sort of extreme levels in the future index futures, you sometimes go to the other extreme, and it has happened. If you can go back to that last graphic, from 3.5 lakh net short contracts in index futures, as of Friday's close, we're at 3.5 lakh net longs in index futures. And so, you are at an extreme, and once again, the point is, you don't have really that many shorts in the system, which essentially cover when there is a fall. So that comfort is not there, and it's a one-sided consensus long sort of going up kind of a market right now. And that's the reason why Friday, for example, we got a bit of a shakeout, and the market actually did not go here or there very much, because you're coming out of sort of markets which I just described. So which leaves us where in terms of sort of levels, etc. Global stuff, there's not very much. Yields are up 10 basis points, so we can talk about that with our guests later on. But supports come in at 28,827, which is the 40-hourly exponential moving average. And then, if that breaks, the next support is the 61.8% retracement of the full rise, which is 23,664. Now, I'm not suggesting we get there, but that is only provided we hold. In case there is a bit of a sideways action which creeps up, we get to the 40-hourly exponential moving average. On the upside, the Nifty needs to take out 24,174. And that's not very far away from where we left off. Bank Nifty has closed around the 40-hourly average for itself, which is 52,313. We left off at 52,342. Here, the supports for the Nifty Bank are 51,918. That's a 61.8% retracement of the recent rise. And in the way up, the Nifty Bank needs to cross the recent high, which is 53,180. I would say this, and I said this on Friday morning as well. If you're long, trail with stops, the hourly stops that we mentioned, but fresh trades, the risk reward is against you. And I think it's perhaps better, prudent, to stay on the sidelines a little bit. We'll get into the earnings season in right earnest in a week from now, when we get the numbers from the IT services companies. And in the second half, we get the union budget, which perhaps for the first time we'll hear from the government what they want to do for the next 5 years. Sonia.
Absolutely. It's a really, really important month, right, that we're heading into. We have so many cues to look forward to. By the way, just look at that. You can't take your eyes away from all the cricketing action, right? So we'll keep sort of basking in that glory. But for now, plenty of things to look forward to as we kickstart a brand new month. So we have auto sales for the month of June that happens today. Now, don't expect any fireworks over there. It's expected to be a muted auto sales for the month of June, largely because there was an extreme heat wave in North India. And because of that, retail footfalls were very low across the board. So maybe just two-wheelers could see double-digit growth, but rest of the pockets will see absolutely flat growth this time. Then you have Q1 FY25 earnings with kickstarts as well. And in that context, because the market has rallied so much, the Nifty is up 7,000 points from the 4th of June lows. The Q1 earnings assume that much more important, because at the end of the day, a bull market is based on, the fundamentals and earnings. So we'll keep track on that. The union budget and the progress on the monsoon are two more things that I'm going to be watching out for very, very closely. But as I said, the Nifty has had a very strong run. It's up 7,000 points from the June 4th lows. The Nifty Bank is up for 7 straight weeks. And the good part is large caps continue to assume leadership. So there was a lot of delivery-based buying in large caps like Reliance Industries in the last 1 week. In fact, Reliance on Friday hit that 21 lakh crore market cap as well. So we're going to keep tracking those stocks. And there was large buying by domestic institutions on Friday too. So DI has bought 6,658 crores in the cash markets. Global markets have not seen too much, just minor red tick over there. But I think the local cues, all that I just lined out for you is something that the street will watch out for very closely.
Well, that's right. In Friday's trading session, we saw a bit of a pullback, and a couple of indicators actually did reach that upper end. Whether you look at the RSI on the Nifty, that went to around 70 odd. Whether you're looking at the PCR, that went to around 1.5. And that's why, we did see a bit of a pullback both on the Nifty and the Nifty Bank from the high point of the day. How was positioning though? The FI as well as the clients, both of them are net long on stock futures. So it could be a stock-specific market from here on, because on stock futures, they're maintaining their long bias. And we'll get to that in further detail in a bit. Though this market is missing the FI net short positions, because that's the one that sees a bit of a short covering bounce when they get the direction wrong. And that's what pushes us higher. What did the FIs do on Friday, though? They added long positions, close to around 30,000 contracts odd. The long positioning has moved to around 83% odd. And the swing factor, that you're talking about, The FI swing factor has been from a negative, from a net short position of 3.5 lakh contracts, it's gone to a net long position of 3.5 lakh contracts. That's the highest I've seen in a very, very long, in the last few years actually. Even adjusted for the change in the contract size, still at around 3.5 lakh contracts, that's very, very high. And take a look at the clients. They are the ones that have been getting right. Now, they have gone from net long to net short, and now they have closer around 2.5 lakh contracts on the short side. So let's see how this goes. But for the time being, it's safe to assume that the markets are missing those shorts in the system from the FIs. On the stock futures, though, as I was saying earlier, the FIs, they maintain the long bias out there. So 7 lakh contracts on the long side. Clients as well, closer on 20 lakh, 19 and 18.5 lakh contracts on. Two strikes are very, very active, and they have highest amount of open interest, relatively high open interest, 24,000 put, 24,500 calls. So both of them, they give us a bit of a sense in terms of market positioning. So the levels I'm looking at in the near term, on the downside, going by the retracement, going by the options data as well, 23,800 becomes important on the downside. That's for today's session. And on the upside, Friday's high will become important. On the Nifty Bank as well, went to around 53,000 or couldn't sustain at those levels. So that becomes a bit of a resistance zone in the near term. The stock that I'm tracking is Bata. Well, it did quite well in Friday's trading session. It's been a rank underperformer. It's still lower if you compare to what it's done in the last 1 year. But you just look at that screen, the 20 and the 200 DMA, both of them got conquered in Friday's trading session. And the delivery-based buying was more than 12 lakh shares. That's the highest we have seen in more than a year. So very, very high delivery-based buying is what we're seeing. And also there was a bit of a short covering bounce that did take place. So put all these three factors together, relative underperformer, crossing some technical levels, seeing delivery-based buying and short covering. Let's see whether or not Bata is set to give up the relative underperformance.
Okay, well, it's a record-winning streak for the markets, right? The Nifty closed above the 24,000 mark. Lots of things to watch out for. There is a Fed speech as well that the market will look forward to very closely. So all eyes on that. And the kind of FPI and DII momentum that we've seen in the markets is something that will be tracked closely. But on the equity side, we have some opinion coming through for you this morning. Aditya Suresh of Macquarie says that India's benchmark equity indices shrugged off a softer than expected election outcome and pushed past record highs, providing bottom-up best ideas in a rich bazaar. He says the 6 stocks to own are HCL Tech, Axis Bank, M&M, Sun Pharma, Titan, Persistent Systems. He says the 6 stocks moved to the bench are Bharti Airtel, Make My Trip, Cummins, Bharat Electronics, TVS Motor, Havels, and the 6 stocks to substitute are Zomato, SBI, Apollo Hospitals, Jubilant Food, Info Edge, and Bajaj Finance.
Okay, well, let's get you some money market views now. This is B. Prasanna of ICICI Bank, who says that the dollar consolidated gains against majors owing to uncertainties over impending election outcome in Europe and UK. He says the Chinese yuan and Japanese yen were under pressure owing to unfavorable interest rate differentials. He says the rupee backed by JP Morgan EM bond index inclusion inflows strengthened, but RBI's intervention moderated the appreciation. Going forward, he expects limited upside for the rupee as RBI's intervention against inflows will persist in the strong dollar environment. Sees the rupee trade in a range between 83.25 to 83.65 to the dollar this week.
Okay, and on the bonds, B. Prasanna of ICICI Bank says that global yields remain range-bound amid softer data prints and hawkish commentary from central bank officials. He says local bonds witnessed lower than expected enthusiasm despite the inclusion in the global index kicking in. He says the SDL and Treasury bill supply announcements for the next quarter are positive at the margin, and he expects the market to consolidate with the 10-year benchmark bond yield likely to trade in a range of 6.95 to 7.05%.
Well, we've got a lot of stock-specific action track for you. Get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at Godrej Properties, Signature Global, Polymedicare, Orchid Pharma, Zydus Life. All of them will be reacting to positive news flow. Out of the list, IRDA, Credit Access Grameen and Vodafone Idea. While 2 stocks, that's Scale and Neogen Chemicals, will be reacting to negative news flow.
Okay, well, Rana Gupta is with us now, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, it's been a fantastic June, near 7% gains for the Nifty. And now we're into the second half, into July. Earnings, budget, so a lot to track going forward. Just a quick word on, let's just look at the earnings, right? IT services will be first off the block, and there is widespread expectation that it'll be better, maybe because it's a weaker base or whatever. And especially compared to Q1Q, Q1 is usually better seasonally as well. What's the sense? IT services index in June was up almost about 8% or so, Rana.
Yeah, hi, good morning. Yes, earnings is going to start led by IT. And I do think the IT companies quarter-on-quarter basis can deliver somewhat better growth. But for the full year, the view is that the growth in the top line still is going to be a bit subdued, probably high single digits, what we can say there. Having said that, I think the IT as a sector, they have underperformed the market, and IT sector generates a lot of cash, and they have a pretty good and well-known dividend policy. So the IT stocks, I think at the end of the day, will continue to behave as defensive as far as the Indian market is concerned, at least in the shorter term. Over the medium to long term, I think the negative impacts of in software services, at least in 2 to 3 year time, of the artificial intelligence will become clear. I think in that case, one would see the top line will continue to grow at a slower level for some time. Margins, what happens, we will see. But in the shorter time frame, let's say 525, I think these stocks continue to behave quite defensively.
Okay. Rana, hi, good morning, and thanks for joining in. It's record highs for our market. I wanted your thoughts on Reliance Industries particularly because telecom was the big talking point last week, right? With those tariff hikes finally coming through. And there's a sort of a breakout happening in some of these telecom names like Reliance. Is there still more to go on the upside in the medium term?
Unfortunately, Sunny, I won't be able to comment on the stock specific, but on the telecom, I think this hike was broadly expected. But if you look at the stock move, I think Reliance hiked tariffs better than expected, whereas the other company, Bharti, hiked tariff lower than expected, and you saw the stock reactions. But I think overall the point is for the telecom sector, right now the tariff hikes are coming through, and there may be short-term reaction in the stock prices depending on where the expectation. But the broader picture is this is one industry which is reflating, where the top lines are moving up, and this is a largely fixed cost industry. And all the leading players, barring the maybe ID, I think Bharti and Reliance, all these leading players, they have got their capex in. So I think going forward for the sector, we will see is that top line going up, cost not as much. So therefore, that should lead to pretty good cash flows for the sector and the leading companies in the sector.
All right. Hi, Rana. Good morning. Good to see you in. What about the outlook from here on for the second half of the year? Do you expect India to be a relative outperformer in comparison to global markets? Given that we have the elections that are out of the way, there are expectations with regard to the budget, and earnings could look reasonably strong. Your take?
Yes, India could still do well as compared to the global markets. In fact, if you include the developed markets in that mix, India is just about average because or slightly better or slightly less because the US has been doing so well. But I think if you compare India and emerging markets, it's clearly a better performer because if you look at the geopolitical scenario across all the emerging markets, there are worries on inflation, worries on fiscal deficit in certain countries, worries on slowing growth. I think in that entire value, India with its political stability and with its economic policies and all that stands out quite a bit. Having said that, I think few points need to be made. I think in India, the industrials, the real estate, the PSU, these cyclical stocks have done very well and rightly so because government priority was on the capex side. On the other hand, I think the private banks, the consumer durable stocks, they have underperformed by a wide margin. So I think going forward, as the budget happens, this time government has got a lot of fiscal room. We would expect some allocation to revenue expenditure while maintaining capex expenditure. But I think incremental delta for revenue expenditure should be better. And that should be positive for some of the consumer durable and private banking names, which has underperformed so far.
Okay, Rana, we will let you go on that note. Thank you so much for joining us and giving us a quick take on what you expect, could be the move in the Indian markets. Let's step into a quick break. On the other side, we kickstart a brand new week with our entire research team joining in to help us with the list of top 10 stocks. Stay with us. Brand new day of trade. First, let me welcome Sonal to talk about Godrej Properties and Signature Global. Sonal, good morning.
Good morning, Sonia. Well, Godrej Properties, the expansion plans pan-India continues, and they've gone ahead and bought two land parcels. The first one is in Bengaluru. They have acquired 7 acres of land. This is on outright basis, and here the development will be done for a high-end residential project. The developable potential is 9 lakh square feet and estimated revenue potential is 1200 crore rupees. The second land is on leasehold basis. It is an 11-acre land in Pune. Developable area is 2.2 million square feet with a revenue potential of 1800 crore rupees. For Signature Global, one of their huge projects, a luxury project in Gurugram, that is the one which has received good launch response. They've been able to do bookings of 2700 crores just on the launch day. So going with green on both these names.
Okay, all right. Thanks a lot for that, Sonal. Well, Hormuz joins us to run us through a couple of stocks that he's tracking, namely Polymedicare, Orchid Pharma as well. Hormuz, take us through the list.
Good morning, Nigel. And as you mentioned, a couple of pharma names. We'll start off with Polymedicure, and the board there has approved raising funds, and that they're doing it through a QIP worth up to 1,000 crore rupees. So we'll keep that on our radar this morning. But Orchid Pharma has partnered with Cipla to launch an antibiotic called Cefepime and Metazobactam in India, and this drug is used in the treatment of complicated urinary tract infections. So that is a partnership that Orchid Pharma has signed in India for launching and marketing this drug in the country. And lastly, Zydus Life, because they've signed a licensing agreement to co-market the pertuzumab biosimilar, which is a critical treatment for breast cancer, and they market this drug. Both these companies, both Dr. Reddy's and Zydus, would market this drug in India. Zydus will market this under the name Sigrima, while Dr. Reddy's will market this product under the name Vomab. And Zydus, based on this agreement, will get an upfront licensing income, and they would also get some milestone-based payments based on the achievement of certain milestones. So positive developments for both these pharma companies, but expect all of these 3 stocks, including Polymedicure, to open in the green today.
All right, thanks very much for that. Well, let's go to Sonal now. GAIL and Neogen Chemicals will be in focus. Sonal, good morning.
Good morning, Prashant. Well, GAIL will be in focus because one of the important pipelines, 2 of them, that's where the commissioning date has been rescheduled. One is the Jagdishpur Haldia Bokaro Dhamra pipeline. The next one is Dhamra Haldia pipeline. The completion schedule has been shifted from June 2024 to March 2025 now. For Neogen Chemicals, there's a stake sale by the promoters of the company. They have sold 5.67% stake in the company, and the existing shareholders, the likes of White Oak Group and SBI Mutual Fund, have acquired the stake. So these 2 stocks will be in focus.
Okay, thanks a lot, Sonal, for that. Vamakshi is joining in this morning to give us some other stocks that are in the news. Vamakshi, good morning.
Well, good morning, Sonia. Let me first start off with IRDA. Good operational update coming in from the company for the first quarter. Loan sanction was up nearly 3.8 times YOY at 9,136 crores. Even the loan disbursements saw an uptick of almost 68% YOY, coming in at 5,320 crores. Resultantly, the loan book saw an uptick of almost 34%, and the loan book now stands at 63,150 crores. Bodes well for IRDA. Expect the stock to open higher today. Credit Access Grameen is the next counter on our radar. They have completed a direct assignment transaction amounting to 333 crores during the month of June. Entire direct assignment pool qualifies for the priority sector treatment. Vodafone Idea expected to open higher today after Bharti Airtel and Reliance Jio hiked their tariffs. We have Vodafone Idea also raising its tariff, and the tariffs have been raised anywhere between 10 to 23%, and this will be effective 4th of July. So this also bodes well for Vodafone Idea. Expect the stock to open higher today.
All right, Vamakshi, thanks a lot for that. Well, here's a quick recap of all the top stocks that we just covered for you. Stocks with positive news flow. They include Godrej Properties, Signature Global, Polymedicare, Orchid Pharma, Zydus Life, IRDA, Credit Access Grameen, and Vodafone Idea. While the bonds with negative news flow include GAIL as well as Neogen Chemicals. Well, that's the top 10 list that we're looking at. But just one more stock I wanted to highlight was NMDC. I'm looking through a Phillip Capital note, and they say that NMDC has gone ahead and cut prices by around 500 rupees per ton over the weekend. That'll be for the month of July. Post this cut of around 7 to 9% on both lumps as well as on fines, the pricing comes up for you on the screen, 5,950 and 5,110 rupees per ton. Phillip has a tactical sell call on NMDC because they're expecting pricing to come down. They're expecting volumes as well to come down. Well, we are at CNBC-TV18 reached out to the management, but we're yet to hear from them. But for the time being, that's, it's more or less on expected lines because you're getting into a monsoon, so pricing comes under pressure. And steel production will not be as much as well. So keep an eye out on NMDC as well. Well, talking about NMDC, let's find out what's going on in the commodity markets. Manisha Gupta joins us to tell us exactly that. Hey, Manisha, good morning.
Morning, Nigel. Thank you. Well, I'll start with the crude oil prices, which is seen a third week of gains. Prices have gained 6% for the month of June. The U.S. inflation data on the Friday was supportive for the market. Also, the U.S. demand seems supportive. The hurricane season has begun, and then there are fears of Israel and Hezbollah war. All of these factors really supporting the crude oil prices. Not so much has been a great month, the month of June, for many of the other metal prices. So gold and silver have closed June on a negative note, while of course on a quarterly basis and the first half, we still are looking at strong gains continuing for the precious metal prices. In the base metal space, the China data comes in mixed. The business activity has been fragile, declining for a second straight month, but the PMI numbers have come in on the stronger side. Having said that, copper is down 4% for the month of June. It has been 6 weeks of constant decline coming in for the prices here as well. But what the street will want to watch out for is the Powell speech on Tuesday. You also have the Fed June meeting minutes on Wednesday and the U.S. non-farm payroll data on Friday. So it's going to be an exciting week with the kind of data that is anticipated.
Okay, exciting week, exciting month, right? We have lots happening this month as well. Thanks a lot, Manisha, for that. Let's slip into a quick break. On the other side, market expert Prakash Diwan will be joining in for some fundamental stock analysis. Stay tuned.
Welcome back. Well, the gift nifty suggesting that we see a 20-point downtick, I think, to kickstart trade today. But let's go across to Sudarshan, I think, who's read up some brokerage notes. He's joining in to run us through a few of them. Hey, Sudarshan, good morning.
Morning, Nigel. So we have two positive brokerage notes coming in from for Indigo. First one is UBS. It maintains buy call and target is raised to 5,400 from 4,000 per share. And its model indicates double-digit growth for India's air travel. And it expects companies' market share gains in international air travel to continue. And it sees 13% EBITDA CAGR over FY 24-27 with upside risks. But in the short term, in Q1, yields and profitability to be impacted on rise in Air India and Vistara's near-term capacity, and it expects a weaker Q2 on seasonality. Next is Kotak Institutional Activities. It also maintains buy call with a target of Rs 5,700 per share. It sees airlines gradually increasing airfares over time, and willingness of air passengers to pay may get tested in the near term. It says company's only airline which is making money, and it's a good play on an uptick in airfares over time. Next is Kotak Institutional Equities on JB Chemicals. It initiates coverage with a buy call and target is Rs 2,025 per share. It says company offers a healthy cocktail of robust domestic franchise, niche CMO presence and measured export strategy. It expects 17%, 19% EBITDA and profit CAGR over FY 24-27. Last is Macquarie on United Spirits. It maintains underperform call with a target of Rs 1,000 per share. It says elections and heat wave to weigh on Q1 sales, and it expects muted volume growth in Q1 and expects 10% growth in Prestige segment in this quarter. It says standalone EBITDA growth may be similar to sales growth of 8% in the quarter that company will be reporting earnings for. That is for April and June quarter.
Okay, thanks a lot for that. By the way, look at the target prices on Indigo Airlines, right? UBS at 5,400, Kotak at 5,700. A year ago, this stock was 2,500 rupees. And look at the kind of move that it has seen. Clearly one of the biggest gainers. Market expert Prakash Diwan is joining in now to tell us, to give us his views on, the stock and of course the market. Prakash, hi, welcome to the show. I mean, this whole travel and tourism theme just doesn't go out of style, right? And Indigo is at the forefront with that market leadership. For someone who's perhaps not partaked in this rally, do you think there's more to go?
Good morning, Sonia. So, you're absolutely right. When you have a secular trend like hospitality and tourism doing so well, and just as an anecdotal data, NSE has also launched a particular index to track this, but entire sector, which tells you that the sector has come of age. The best way to play Indigo for somebody who was missed out would have to wait to buy on dips. And mind you, airline companies always give you some dips. There's news flow around crude oil prices, or it could be around occupancy rates. It could be some sort of a competitive intensity that sparks up. So you'll get those things. But given the fact that in the next few years, Indigo could grow at a CAGR of mid-teens, there's nothing wrong in buying it if you are okay with this kind of a market outperformance. Being the leader, it stands in a better place than any other company to participate in this boom. So you will have to look at Indigo at lower levels, because the risk reward, as you rightly said, the last 1 year, it's almost done about 70%. It's going to be difficult to make money in the same way from here on. But if you buy on dips, probably those 5,500, 5,400 targets could probably make sense if your entry levels are better. But I'll just leave you with one thought. The next wave of re-rating for Indigo is going to be on the supply of aircrafts. And if that gets sorted out, you'll probably see another leg up, because that's what they're waiting for, to expand in both the domestic and the international routes.
Okay, all right. Hi, Prakash. Good morning and good to see you after a while. What about Vodafone Idea? For those that went in for that rights issue, they have made very, very clean, more than 50% returns in a short duration of time. At around 18 rupees, 17, 18 rupees, what's your view on the stock?
Good morning, Nigel. So, the FPO investors probably couldn't have got it better than this. Everything that could have gone right for Vodafone has actually gone right. And to the extent that everything happened in a very short span of time. Personally, I was expecting, and I do have an exposure to this name, that things would take some time. The tariff hike was probably the last, or the cherry on the cake. It was more of, if that happens, you probably have this bout of re-rating getting completed. So now you will probably see some sort of profit taking. I don't think there are any more significant triggers involved. It's now time for them to go on the ground, start getting execution in place, 5G sites, expansion of the subscriber base, the rationalization of the subscriber base. So, and remember, the hike that they've announced seems a bit lower than what Jio and Bharti have, given the fact that there is competitive intensity that they need to grapple with. But for them, that also helps resuscitate the growth in their earning, but they're still making losses. So there's nothing which has changed dramatically except for the setup. So from 11 to 18, I think it's a great journey. You will see some profit booking for sure. It's a matter of time, but in the long run, it could start kind of, chugging along with the other two names in terms of growth rates, which are fairly better than what we've seen. So it doesn't deserve to be at these valuations for too long. But at this moment, at this juncture, at this phase, I think some profit booking is likely to happen.
Prakash, hi, morning. I think one of the things which will happen now is the trading window will close, right? Because earnings are around the corner. So the spate of block deals will perhaps sometimes slow down a little bit. May not be a bad thing. And then, of course, should resume again from what we are picking up. Prakash, for IT services, which will be first off the block, do you think, the IT index is up almost 8%, 8.5% in June. Do you think it's kind of built in, or you think there could be surprises? The quantum of surprises is still 2%, 3% constant currency growth, but that constitutes a surprise for IT services. And where exactly? Infi has done fairly okay coming into this one. Persistent was a big mover on a Friday. Just thoughts, any money-making ideas in that space?
Good morning, Prashant. So, while the 8% catch-up that IT demonstrated in June seems quite significant because the previous 2 months were very tepid, I would believe that in the next 3-4 months, in the second half, let's say, of calendar 24, IT will probably start looking slightly brighter than what it has. And if you play a little bit of a contra call, the stocks that haven't participated much and they are much below their long-term means, like Wipro, for instance, in the large cap. Infosys has done a bit better, but I think there's still much more room. The surprise would probably be in the mid-cap IT, the likes of, you've seen OFSs, look where it's moved. The same kind of a move, if not to the same ferocity, but directionally, could probably be in Persistent, could continue to be in Birlasoft. And these are names where very clearly they've proven the fact that they will continue to grow at better than industry numbers, given that they have very niche, very strong kind of trajectory. So that is going to start getting differentiated. Infosys probably has its advantages in many ways. The key trigger for the entire sector to get re-rated will be if hiring starts looking up, or they start talking about hiring to start looking up in their guidance. So if that were to happen, you'll probably see a re-rating which is far more significant than just this 8% that we saw last June. So, we'll have to wait for those things to develop. I don't think there'll be any unpleasant surprises, if you really ask me. And markets going into earnings season for IT with very low expectations, which is a good thing always. So if something happens which is positive, even incrementally not too big, you'll probably see a little bit of move towards IT, because the exposure to IT in most institutional investment portfolios is fairly low as compared to other sectors which have actually done very well in the last 6 months.
Okay, all right. Prakash, noted your view on tech. Just request you to hang on. Let's get straight to our first management on the show. That's Healthcare Global Enterprises. They strengthened their dominance in the cancer care by buying 51% stake in Vizag-based cancer hospital, Mahatma Gandhi Cancer Hospital. Mr. Ajay Kumar, the executive chairman at Healthcare Global Enterprises, joins us on the show. Hi, good morning, sir. Thanks a lot for joining in. Well, I'm looking at the financial. It appears you've done a rather good deal. The enterprise value of close to around 400 crores. And it does an EBITDA of close to around 40 crores. So it's a good deal struck at around 10 times EV per EBITDA. How do you fund this transaction? And what does this take your total debt to? I think the last counted number was around 350 crores.
Yeah. For us, we are doing it in 2 tranches. Initially, the 200 crore, what we are going to do will be internal accruals and some debt. But we have 18 months period to do the rest of the fund to reach 85% stake in the system with the partner. So that we have time to see, we may even do some primary at that point. A combination of 2, what we are looking at to reach our 85%. So we are very comfortable with this. And when we calculate our debt to EBITDA ratio and all, it will be very much in a comfortable margin. So we feel, this is accretive for our EBITDA margin, is accretive for our ROCE. So overall, and most important thing is we are getting a very good partner in Murali, who has quite a good reputation in Vizag. And with our Vizag center being there already, we will be in a very dominant position in that part of the country.
You want to give us some numbers, Dr. Kumar? 350 crores is what it'll come to for that 85% approximately. Yes. How much of that will be debt? Could you give us that number? And also, on an average, this acquired entity is doing around 120 crores of revenues. Where do you see it scaling up to, say, in the next 2 years or so?
I think the growth will be in the region of 15%. And with the dominance what we are having with our center, it can even exceed that. And as far as the debt and equity is concerned, as I said, most of it's quite possible the 200 crores will be from the debt and internal accrual, but the rest will probably come from primary, which we have to take a call in 18 months.
Okay. Mr. Ajay Kumar, hi, good morning. Your operational improvement is something that the street has really liked. I mean, your margins have been the best in the last 6 quarters. Just wanted to know from you, is there scope to build on to these margins? If yes, what are you looking at? What are the triggers for a further operational improvement?
I think we have a very good foundation now. We kind of went through the 3 years in the 20, 21, 22. Now we have consolidated, and with that, what we look at is our mature centers, as we know, are performing excellent. Our issue has been in our new centers, but they are all taking shape. And with that, we expect in the next 2 to 3 years, our operational margin to increase significantly, over 20%, as well as our ROCE will increase significantly in the next few years. So all the fundamentals are in place, and with this acquisition, it is only going to add to this value. That is why we feel we will continue to be dominant. We will look at more of this kind of acquisition, and also we will certainly look at some of the brownfields, and maybe like in a city like Bangalore, we are doing centers in Whitefield and in North Bangalore. Those will be our strategy to see how we can scale it up in the dominant cities. We are, for example, in Ahmedabad, we doubled our bed strength now. We have opened the new center. This will be our way forward as we move forward.
Okay, so you said 20% margins is what you're looking at over the next couple of years. What does this do for your market share? Because in Bangalore, which is your home market, you have 30% market share currently, right?
No, we have better than 30%. And we expect...
Okay.
We expect...
Sorry, I didn't get the number. What is the market share right now?
Now, we are at about 34% now. 34%. And we expect to reach close to 40% with our 2 new centers coming. And we will be in quite a dominant position here in Bangalore, so also in Ahmedabad.
Right. Mr. Ajay Kumar, hi, good morning. So while you go out and acquire companies, there is an M&A within the company which is waiting to get closed, right? That stake sale, which has to come through.
We don't know, and I can.
You're laughing, but let me ask you this pointedly. What we understand is it was supposed to close by the end of June. It's of course 1st of July now. So are we very, very near? Is it a matter of weeks? I mean, you would have a sense. I'm not asking you for who's the buyer, but is it a matter of a week, 2 weeks?
I can tell you one thing. As a founder, I'm very happy with CVC. I will continue to work with CVC. And when the time comes, if there is any change, I will look at it certainly. At this point, as far as I'm concerned, CVC is our partner. And as you can see, this M&A has happened without any disturbance. These things will continue to happen with CVC as our partners.
No, so are you saying they're not, I mean, it's off? The transaction is off? Because you told us in so many...
All I'm saying is, it is for you to ask CVC. For us, as HCG growth, nothing has come in our way and will continue to grow.
Because, in our previous interactions, you've told us that you kind of confirmed that this is on the anvil, this is happening, and you'd prefer a financial partner rather than a hospital company coming in, right? You've said that much.
No, what I said was, whenever it happens, obviously at some point CVC will try to exit. Whenever it happens, I would prefer the right partner with whom I will be willing to work. And I have a lot of for financial partners, everything else. We have done very well in the last 20 years with several financial partners. We continue to drive that. For us, the important thing is medical excellence and growth. And I'm
absolutely. Sure. Could you again? We'll ask CVC. We've been asking CVC, but again, is it very? You'll have a sensor, right? I mean, is it very close? Because it'll get done, and then we'll move on.
Honestly, I don't have a sense. Okay.
Okay.
So I would leave it at that. Honestly, I don't. And I think that the conversations I have with CVC have been very productive. They're very supportive in our board meetings, and we'll continue to move forward.
We'll have to wait for that transaction last.
Just one thing, Mr. Ajay Kumar, while you were doing this acquisition, the CVC did not tell you wait 2 months. Let the new guy weigh in on this. They didn't say that.
Yeah, that is exactly my point. We worked with CVC closely, and they were quite involved in closing the transaction. So there was no waiting period. We really did smoothly and executed it.
Let's focus then on the transaction. 85% you've accounted for, 51% and then the 34%. What about the remaining 15%? When do you go ahead and acquire that, and at what valuation?
See, we like the valuation for the 85% will be the same as now.
Yes. Yes.
The 15% we would like to have the partner keep it, because our model of HCG has always been partner model. And this is why HCG has grown very well. And we hope Dr. Murali Krishna will stay with us for a long time as 15% partner.
Got it. Okay. And also you said that 15% is the growth you're looking at. That will be the ARPOB growth, or occupancy goes up? How do you look at that? What is the current occupancy?
The current occupancy is there over about 65%. And he is very good. And the number of, as you know, in oncology, it's also the footfall more than occupancy. All of that has been very well. And the growth, when I talk about, is the revenue growth.
Okay, the revenue growth. You also said you're looking to take your market share in Bangalore from 34% to 40%. So I want to understand what does this do to your ARPOB? Because the ARPOB currently is almost at 43,000. What kind of growth are you looking at there?
See, Bangalore ARPOB is very high. and that will continue to grow. We expect Bangalore ARPOB to be in the 70,000s, and maybe it will stabilize at that point with so many things happening. And what is the upside you can get in ARPOB? In a big city like Bangalore, as you know, some of these already companies are already giving around 70, 75. That is where we will be. In terms of the overall, we expect it to be over for close to 50,000 coming in the next few years. And it can even exceed that. It all depends on how we execute it, how we drive, how the growth will. And the most important thing in ARPOB is the mix. What is the mix between various entities which are giving us this ARPOB?
Okay, we will leave it at that. Thanks a lot for joining in. Appreciate your time here on CNBC TV18. That's 8CG. The stock is up about 20% in the last 1 year. And the management is very confident. Growth will be about 15% going forward. They talk about how the market share in the Bangalore market is almost 34%, and they plan to take it up to 40%. Let's do one thing. We have a brand new market to trade today. When we come back from the break, Shrikant Chauhan and Sudarshan Sukhani will join in for some technical trades. Stay tuned.
Okay, welcome back. There's 10 minutes to go for the pre-open session, and the GIFT Nifty in the morning was indicating a flattish start, slightly lower after, of course, Friday we didn't really do very much. There was a big come off from the day's highs, etc. Sudarshan Sukhani is with us. Mitesh also will be with us in just a bit. Gentlemen, good morning. Sudarshan, if I can come to you first, it's all about risk reward, right? Now, after a fantastic June, 7% kind of gains. How's the near term looking, Sudarshan? Let's start with the indices.
Good morning. See, last week I was a little afraid of going into the index. The markets were relentlessly going up, and it was difficult to say when to enter. So the focus was on the bank Nifty. Today, things have changed. On Friday, we had a pause. A pause in an ongoing bull market is a good opportunity to go and enter that trade, because at least there is some kind of a consolidation that was visible there. So for the Nifty, because of that pause on Friday, I would be a buyer today. Now traders will have to determine how they want to buy the Nifty, whether they want to buy a call or a bull spread or futures or ETF. That's for the trader and his or her risk profile to decide. But the trade today is to go long in the Nifty, keep an approximate stop under 23,850, avoid the bank Nifty.
Avoid the bank Nifty. Okay, got that. Shrikant Chauhan is also with us. Shrikant, hi, good morning. 24,000 on the Nifty, right? Who would have thought that this milestone would be hit so fast? Your thoughts on how to approach it now? Do you think we can build on to our gains? And while you're at it, what are the stocks to look at?
Good morning, Sonia. Good morning, Prashant. Well, for Nifty, our view is that it is finding support whenever there is any minor correction in the market. So in case if we see the market is dropping to the levels of 23,950 or 900, there we should look for taking long positions with a stop loss below 23,850, as Sudarshan said. 24,150, 24,250 are the levels to watch out for. There I'm expecting market to come under some profit-taking pressure. So if we see the market is moving towards those levels without any correction, then take some profit close to resistance level. But for Bank Nifty, there we are expecting some underperformance. Bank Nifty, I think we could see some more correction in the near term, close to 52,000 levels or 51,800. The Bank Nifty is having support. So around 51,800, look for taking some long positions. Otherwise, it is better to focus more on oil and gas companies. And from this particular space, we like Petronet, which is currently trading around some 330 levels. the stock is forming some specific reversal formation and breakout formation on weekly, monthly basis. So Petronet LNG currently, which is trading around 330, is indicating some more strength. We could see the levels of 350, 55 in the near term. We can keep stop loss around 320 for the same. And the other stock which we like is Tech Mahindra, because we feel that IT stocks should do well. And in that, Wipro and Tech Mahindra, they are showing a lot of momentum. So Tech Mahindra, which is around 1440, 1430, there we are expecting 1500 sort of levels. And we can keep stop loss around 1400 for the same.
Got it. Okay, thanks for that, Shrikant. Well, Sudarshan, let's come across to you. What about the individual stocks you're tracking?
Well, Hindalco is a buying opportunity. Keep a stop under 680. Eicher Motors is an intraday short. Short selling should be done only intraday. A stop above 47.20. Another intraday short, because markets could be a little unstable, at least in the beginning, is Havells. Havells is an intraday short with a stop above 1860. And for my final trade is a buying opportunity in Ultratech Cement with a stop under 11,200.
Okay, well, let's do one thing. Let's also get Chandan Tapare on board. He's a derivative and technical analyst at Motilal Oswal Financial Services. Chandan, hi, good morning. Do you think the strong tidings for the market are something that can continue? Actually, the GIFT Nifty is suggesting a slightly softish start today. So if that does come about, what is your expectation and what are the levels to watch?
Good morning, Sonia, Nigel. Thanks for having me. So we have seen a good run-up in the last series. Nifty rallied by around 7 to 8%. We reclaimed psychological 24,000 marks. And at the same time, FI's long-short ratio on index has moved from 12 to 82%. And this ratio is at recent highest level. So it may act as a contra-indicator, and because of that, some sort of consolidation or profit booking decline could be there. But major trend of the market is intact to positive, and that's why every small decline could be bought. So now we need to keep in mind that already we have seen a decent run-up. So now it's time for stock-specific action or some consolidative move in the market. As of now, I consider 23,665, which is the 61.8% retracement of the recent run-up, to act as a major support. So profit booking of 200, 300 points could be there. But in that scenario, 23,665 could act as a major support to commence the next leg of rally towards 24,400 level. Now looking at the Bank Nifty index, it formed a bearish candle on the daily chart, took some pause in positive momentum. So it may retest the previous breakout zone. So I believe it can drip down towards 51,500 to 51,138, then only the next leg of rally. So in both the indices, we might see some profit booking decline or consolidation before starting the next leg of rally. Now looking at the stock wise, we believe that momentum could continue in the stocks the way SIP flow is continuously happening in the Indian market. So first trade is buy on Apollo Tyre. We have positive on the Nifty Auto and selective Auto N's name. So Apollo Tyre and most of the tire stocks are in our watch list. So we are recommending to buy on Apollo Tyre. It has given a 15 weeks long consolidation breakout, continuously making higher top, higher bottom on the daily scale. So one can buy with support of 528. We are expecting a run up towards 565 in Apollo Tyre. Second trading idea, there is buy on Grasim, one of the strongest counter. In the recent past, we have seen buying into in cement sector. That is also supporting the positive stance. It has been making higher top, higher bottom on the daily, weekly chart. So one can buy with support of 2620 for a target towards 2800 level. Last trading idea, there is buy on IGL. We have positive on the IGL, MGL, Petronet. An entire sector looks promising for 5 to 8% run up. IGL has given a 30-month low consolidation breakout. We have seen better rollover with higher roll cost. That also indicates positive momentum could continue. It has given a decisive breakout above 495, 500. So one can buy with support of 493, and IGL has potential to continue its momentum towards 525 zone.
Thank you. Okay, thanks a lot, Chandan, for that. Well, those are a whole host of ideas coming to you from Motilal Oswal Financial Services. Let's slip into a quick break. When we come back, we'll have the pre-opening rates. Also, Abhishek Gaushinde of Sher Khan by BNP Paribas will put focus on the auto sector today, as we have the auto sales for the month of June that will be released. Stay tuned. Okay, welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio. We're beginning a brand new day, a brand new week, and guess what? A brand new month. So we're going to get lots of stocks in focus. Sonal is joining in this morning to give us today's Momentumizer stock of the day. Sonal, what do you have?
Good morning, Sonia. Well, the stock on my Momentumizer list today is 361 WAM. There's been a lot of action in this stock lately. This month itself, or I would say Friday, it was up 5%, and last month it was up 26%. And majority of those gains came in the last week of June. That time the stock was up around 17%. And Friday's volumes were 3 times the average volumes that the stock trades at. And if we see the traded value as well on NSE, there's been a big surge in terms of volumes and the value traded as well. So from levels of around 24 crore rupees that we saw on Monday, it increased to levels of around 523 crore rupees. So there was a massive move in terms of the traded quantity and the volumes as well. Now remember, in the month of June itself, on 13th June, the company announced that they're foraying into wealth tech, and they'll be acquiring ET money from Times Internet for a consideration of around 366 crore rupees. Looks like that is something which is playing out because there's been a sudden spurt in volumes and momentum in the stock in the month of June.
Okay, thanks a lot for that. Prakash Diwan is still with us, so let's get his call on a couple of more stocks. Prakash, I wanted your thoughts on Irida. I mean, that was one of the darlings of the stock market, right, in the last 1.5 years. The loan disbursement data that we got today is looking very good, actually. It's a growth of almost 68% year on year. Do you think there is more momentum in this stock now?
So there is only momentum in this stock. There's no value. So that's this way the stock is positioned. But yeah, on a more serious note, what happens to Irida going forward is it's in a very sweet spot, so where it doesn't need to look for borrowers, and especially quality borrowers, which are backed by PPAs and everything. Whereas all it needs to do is make sure that its capital raising plans, the balance sheet strength keeps on expanding at the right time. Of course, it's available at a multiple of price to book, which is fairly higher as compared to, let's say the more staid and mature PFC, REC kind of businesses. But given that it's focused onto a segment which is so rapidly growing, I would believe that going forward, as soon as you have the interest rate cuts getting initiated, whether it happens in December, happens in Jan next year, you'll start seeing a huge significant change in the cost of funds and hence the spreads getting much more healthier. So from that perspective, it's very promising. There are people who haven't been able to buy it because it's run up so much after the IPO and the listing and all. But I would believe even at these levels, if you are okay with decent 18-20% kind of gains, it could probably give you that CAGR over the next 3 years visibly, though it's high price. And be ready for volatility, of course, because there will be people wanting to exit. But given the metrics that I have studied for this company, yeah, you could get that 18-20% of a growth going forward, even at these 190, 196 levels.
Okay, well, Prakash, just stay on. We'll come back to you for more. So that's Irida in pre-opening. Actually, that stock is up almost about 3% 4% now, so picking up pace after strong disbursement growth that has come through. But let's put the spotlight on the auto sector. Auto companies will begin announcing their sales for the month of June starting today. Abhishek Gaushinde, the Deputy Vice President Research at Sharekhan by BNP Paribas, joins in. Abhishek, hi, good morning, and thanks a lot for joining in. It's going to be a muted month because we had those severe heat waves across North India, so retail footfalls have been affected because of that. But overall, what are your own expectations, and is there any standout performance that you're looking at this month?
Yes, you have rightly mentioned that there's heat wave things, and beyond that, this lack of auspicious season has also impacted the retail sales in this month. Particularly, there was no major marriage dates were there, and there was no major festivals. So the natural trigger was not there. But even though the players have been doing means trying to push up the sales by some promotional schemes or region-specific discounts and all this. But it is right that broadly retails was muted, and in line with our estimates, we are expecting that Q1 overall would remain muted, even in the retail sales in some other segments like smartphones and all this thing. We have seen there's a major shift towards the online because of the this heat wave kind of a thing. But what we are expecting that on a Q1 per se, the most of the players will report YOY growth in their volumes, and in the Q2 we will see that some from July second half onwards some retail uptick would begin, mainly because of this marriage dates and the opening of the school and colleges. And the Q2 would largely be month of the production, and we will see a peak retail sales during Q3 because of this falling of the festive season. And by that, we can expect that as the monsoon deficit has been narrowing down, so it may also have some positive impact on the rural sales. And rural sales uptick would be a critical thing to watch out this year, because so far the growth has been driven lightly by the urban segments.
Okay, so in terms of stocks, if you're saying that rural is going to be watched out for very closely, which are the stocks where you see more potential in terms of both growth and where there is valuation upside as well this month around?
Say for example, from rural perspective, we have been largely positive on the Hero MotoCorp, given that the kind of improvement it has shown in its margin profile, and has been continuously pushing its towards the EV sales side. So once the rural recovery would come out, then its entry level product portfolio would see a kind of a push up, and that may see a kind of uptick in its earnings also. So far in terms of the valuations, it has been considered as the cheapest stock in the overall two-wheeler peg. So as the earning momentum would continue, we will see that some uptick would be there in its valuation. So say for example, currently Hero MotoCorp is trading at 20x, and while Bajaj Auto is trading at 25x. So some valuation catch-up would be there as the volume growth would drive the profitability, as given that so far the performance is largely driven by the margin expansion.
Okay. You know, as we speak, Bajaj Auto's numbers have come out and they're looking pretty good actually. So the numbers are higher than what the estimate was. 3.41 lakh was Nomura's estimates. Bajaj Auto sales have come in at over 3.5 lakhs, and that's something that the street will definitely like. In any case, the stock has been a huge outperformer. I mean, this year the stock is up almost 40%. I'm just going through the numbers now. It's a 5% growth that Bajaj Auto is seeing. We were expecting two-wheelers to, be slightly on the muted side. Domestic growth has been just about 8% for Bajaj Auto. It's actually exports that have hardly grown. 1% growth is what exports have seen at 1.42 lakh units. The domestic growth has been about 8% at 2.16 lakh units versus 1.99. But if you look at it, the sales are better than what the street was estimating. Now, Abhishek, I wanted your thoughts on this, particularly on Bajaj Auto, right? These are slow sales. I mean, single-digit growth is what you're seeing, but better than what the street was estimating, and the stock has rallied a lot. Do you think there are more triggers in Bajaj Auto to take the stock higher?
See, Bajaj Auto is largely been seen for its product mix, because it has a higher share in this above 125cc segment. So volumes are not truly representing the kind of a potential it has and the kind of a margin profitability it would have. Going forward, that beyond its numbers, that what Street has been closely watching out, that its upcoming launch on the CNG versions, because it would be a first of its kind of a launch from in the CNG motorcycle segment, and the kind of network expansion that we have seen in the CNG side. And if this product would come out at a decent pricing point, although the success of the product would be seen over the period, but if the product would be able to steer the market in the initial period, then definitely it would be considered as a new stream of revenue for Bajaj Auto, and keep it up its high valuation in the market.
Okay, just a word also, I mean, the three-wheeler sales for Bajaj Auto continue to be very strong. So total three-wheeler sales have gone up 16%. It's the two-wheeler pocket where they are seeing some pressure on the export side. And this is also because, a lot of their global markets, whether it's Nigeria, continue to face issues, especially with currency devaluation, etc., being the big issue there. There's Egypt as well. So the slowdown is really in two-wheeler exports. Otherwise, two-wheeler domestic market is seeing a 7% growth. Three-wheelers are doing fine. And overall, it's a 5% growth. Abhishek, just wanted your views before we let you go on one last pocket, which is commercial vehicles. We are seeing some amount of rebound over there. Any thoughts and any favorites here?
See, on the CV side, that it was expected that the Q1 would see some pressure because of the ongoing election, as we have seen in past also, that during election period, the fleet operators entered into a wait and watch mode. But after the election, based on our dealers' feedback, we have seen that some uptick is there, and this OEMs are also pushing up the demand via some promotional schemes and all these things. So even in the Tata Motor has indicated for a price hike from January, from July onwards. So that may also, we believe that it may also result in some kind of a preponement in the sales in the month of June. But broadly, we believe that from the second half of the Q2, we may see gradual uptick in the MHCV segment also, assuming that the economic activity will again catch up after the election. So in a CV segment, we are liking Tata Motors because of its two things. One is its dominant presence, and second is the continuous focus on the EBITDA margin that has been continued so far, I think, for last 4 to 6 quarters. So we are liking Tata Motors more in the CV segment.
Okay, you're liking Tata Motors more than the in the entire CV sector. Got that, despite a 27% rally. Got it. Finally, on tractors, any thoughts? I mean, it has been very lackluster. But now the expectation is of a decent monsoon, right? So between Escorts, M&M, anything you would buy?
See, in the tractor side, that we all know that there is a high base effect and people are guiding for at least for up to maximum of a 5% kind of a growth. But what is happening in the tractor segment is also that the market share thing is moving from here or there. We may see some kind of a market share improvement in the Mahindra and Mahindra in the Q1 of this particular compared to the previous year, given that Q1 is a seasonally good quarter for OEMs, the wholesale side, as they build up inventory ahead of the festive season. So that may be visible in the numbers also, but retails has been still lagging. It's all depend on the kind of a monsoon that would drive the performance. But in the this tractor segment, if you talk about that, we are liking Mahindra and Mahindra because of the two things. One is dominant position in the tractor segment, and second that it's auto segment has been picking up, which is somehow supporting the kind of a shortfall if some there would be in a tractor segment. So from this perspective, we are liking Mahindra and Mahindra in the tractor segment.
Okay, actually, you know, it's come on time because we've got the Escort sales right now and it's not looking good. Total sales are down by 2.6% for Escorts. Domestic sales have just seen a 1% growth, and the company in the press release says that sales in the key market saw a delayed pickup in retail season. But now the season is expected to continue to grow into a larger part of July as well. With the monsoons progressing well and continued government support, including an increase in MSP, they anticipate demand to improve in the coming months. But there was a delayed pickup in the retail season, and hence just a 1% growth is what Escorts has seen in their domestic sales, and that's why there is some pressure over there. Abhishek, we leave it at that. Thanks a lot for joining in. So two numbers that have come out: Bajaj Auto sales slightly better than what the street was estimating, but Escorts continues to be under pressure as the entire tractor segment has been reeling because of the delayed monsoon. But let's get some 9-10 calls going. I think the pre-opening rates have settled absolutely flat, so it looks like we're going to consolidate with our gains. But Sudarshan, what's the big call at 9-10?
I consider buying Hindalco with a stop under 680.
Okay, Hindalco is a buy. Reliance, by the way, continues to be in focus. There was a big move last week. Sonal is here to give us the latest on that. Sonal, over to you.
Thank you for that. Well, Morgan Stanley thinks there's more steam left in Reliance Industries, and that's why they've gone ahead and increased the target price as well. They say that Reliance Industries is in its 4th monetization cycle this century, and they see up to $100 billion in value creation as the business cycles will inflect. There will be new cash flows streams that will emerge, and multiples catch up as well. On the back of this, they have raised their EPS estimates fractionally for 2025 by 7% for 2026 and by 8% from 2027. They've also increased the target price by 16% to come at 3,540 rupees a share. They say whenever there's a monetization cycle, it has delivered close to 2 to 3 times value creation for shareholders in the past nearly 3 decades. And each decade has seen a market capitalization addition of $60 billion and actually more than that. And that is something that they expect will continue in this monetization cycle as well. They estimate a 12% EPS CAGR over the next 3 financial years with multiple triggers across the sectors, and they continue to have an overweight rating on the stock.
Okay, thanks a lot for that. Well, I also want to do a quick check on Interglobe Aviation before the market opens. Now, there are a lot of brokerage upgrades on the target price that have come in on Interglobe Aviation. UBS has a buy with a target price of 5,400 on the stock. Kotak has a buy with a target price of 5,700. Now, first on UBS, right? They talk about how there's a 13% EBITDA compounded growth that they're looking at. Of course, there are upside risks as well, but there's a double-digit growth that India's air travel industry is staring at, and hence UBS is very bullish on the stock. They expect market share gains in international travel to continue, and Q2 could be slightly weak because of seasonality. Kotak also has a buy. They have a target price of 5,700 on the stock. They say airlines will gradually increase fares over time because of how demand has picked up and the monopoly that Interglobe Aviation is looking at. Interglobe is the only airline that's making money right now. Well, with all the cost cutting that they're doing, it's fair enough that they're making money, and it's a good play on an uptick in airfares over time. So, yeah, this is a big mover.
I mean, we were talking about hotels and we were talking about all kinds of travel plays, but Interglobe really, I mean, right? Definition of travel, and has really traveled a far, far distance from where it was a year ago, Sonia was mentioning. The first trades are coming up on your screen. So you've got 24,030 on the Nifty, so this is flattish. The sensex is starting, basically a little flat as well, so not very much change, at least on the frontline indices. So nothing, 0.05, 0.01, so these are what we have coming through. The Nifty Bank is also up on your screen with, again, absolutely quiet start this Monday, right? The mid-cap index is also starting in a very unusually quiet fashion. Not used to these kind of markets where, it's all been boom, boom for the last so many weeks now. Last week was a big one, and of course the month of June was a particularly great month as well. Some large cap stocks, etc., which are starting to show up at the bottom of the screen: Tata Steel, Nestle, ONGC. But I suspect there are bigger movers in the broader market reacting to news flow, etc. So let's take it there.
Okay, yes, a lot of individual stocks in focus actually. So let's get straight to it. IRDA, right? 4.5% higher on IRDA this morning on the back of the strong growth that IRDA has seen in terms of their disbursements. By the way, Escorts Kubota is under pressure now because of the sales numbers and the weakness that we've seen there. Barely a 1% growth on their domestic sales, and overall sales are actually under pressure. And then a couple of other names, Bajaj Auto as well. Let's pull that one up. Numbers are slightly better than what the street was estimating, and Bajaj is up 1.5%. Hero is actually the top gainer right now. The valuations of Hero MotoCorp are looking compelling if you compare it to some of their peers. Maruti Suzuki as well. So all the auto stocks in anticipation of decent numbers are up almost about 1.5%. Eicher Motors also trending in the green right now. The Bank Nifty is just about under a bit of pressure, nothing alarming, but just kind of slightly soft. In terms of other stocks in the broader markets, you have Zomato, India Cements, that's slightly under pressure right now. NTPC, BHEL, RVNL that are down anywhere between 0.5% or so. Tire stocks have been gaining ground on the back of the price hike, impending price hikes across some of them. So JK Tires is up 4.5%. A couple of other names also looking good. And railway stocks were the big movers last week as well. Texmaco Rail is up another 2.5%. So keep that on your radar. Something like a BEL, Dish TV, Bajaj Hindustan also trending in the green. So not a bad market, you'd have to say. By the way, there's a 2% block deal that has happened in Religare. So just keep that on your radar as well. I think 1.9% equity has changed hands in Religare. So that's one stock that we're looking at this morning too. But otherwise, after the big run we had last week, just consolidating.
Well, that's right, Sonia. And CDSL, that's another stock that's flying away. It's up close to around 6%. They're going to be considering a bonus issue. So that stock's up and about, up close to around 6%. L&T Finance, well, that one, in fact, is up close to around 2%. UBS has initiated a buy rating, target price of 230 rupees. They believe the company is on par to expand its balance sheet after more than 5 years as it nears completion of its loan book shift from wholesale to retail. So that's another stock that's doing pretty well. Well, another one that's doing well is PVR. Kalki that was released over the weekend, it's clocked, I think, more than 300 crores. And yesterday as well was a pretty good day. So it picked up. Bit of a dip is what we saw on Friday and Saturday. But on Sunday, the collections, I believe, are up close to around 85 crores. So on the back of a strong performance of Kalki, that stock, in fact, is up and about in today's trading session. A few more notable winners. You have Sambandhana Motherson as well. That's up close to around 2.5%. So that's moving high as we speak. And Reliance Infra, that stock is down close to around 6%. Zomato as well has come in for some profit taking. That one as well down close to around 2.5%. Prashant.
No, absolutely. And, the indices are, again, kind of deciding where they want to go. But I think, as you guys mentioned, there is enough and more happening as far as individual stocks are really concerned. So, maybe just a couple of more names before we go any further. I think CDSL is up another. CDSL is starting. See that big move, by the way, that bonus proposal. It went up 10% plus. It's up 2%. It's got very large volumes for this point in the day. And these shipbuilders are coming up with large gains. Cochin is up 3%. Garden Reach is up 3% as well. Wockhardt, I'm not sure if we mentioned, Wockhardt is up 12%. 768 on Wockhardt. There is, of course, that molecule which Ekta had been highlighting. So 772 coming through on Wockhardt. It was a big day on Friday as well for Wockhardt Pharma. Solara went up 10%. I think there is a new broker initiation there. 3.5% on Solara, 563. It was up 10% on Friday, Solara. Patanjali is up 4%, 4.5%, 5% actually. So decent sized volumes. So, and by the way, volumes are picking up across the board as we are tracking this now. Stanley, the new listing, I think that's up about 4%. And we'll have, I think we'll have that, we'll have rates on that a little later. Godrej Properties is up about 1%. And I can look at other stuff. CMS Info, Iron Exchange is up 6%. So VATech, Vabag and Iron Exchange were big movers on Thursday, not Friday, but Thursday. And I can spot Iron Exchange with a 6-7% move right now. We should look at VATech as well and see if there is something happening there. 2:1, by the way, advances to decline ratio. Idea is the biggest volume-led loser. Idea ended down on Friday and it's down once again. So profit booking continues here. Stocks just under 18 rupees. Zomato is down about 2.5%, 195-ish on Zomato. But I can't really spot anything else big. Titagarh is down 3.5%. Moil is down about 2.25%. GMR Infra is down about 1%. Reliance Infra is down about 5%, 190-ish on Reliance Infra. There is Medanta, which is coming up with a 3.5-4% cut. So this is, the broader market, which is coming up with volumes right now.
I just want to point out Dixon Tech. I know we've talked about that stock a lot, but just look at the move there. 12,000 now, 12,300 on Dixon Tech. It has been the biggest mover in 2024 so far. I think the stock is up almost 90% in 2024. This is that era of some of these companies. Been a darling of the stock market. Once again, come back to action in a big way and, fresh high on that one.
Incredible moves here in the entire EMS space. And Dixon, as you said, clearly has been the leader of the pack. JB Chemicals is also seeing a very sharp move. We are flashing at the bottom of the screen. Kotak, I think, has initiated coverage. And they're calling it out as a great performer business-wise. Harsha Upadhyay is with us, CIO, Equity, Kotak Mutual Fund. Harsha, good morning. Good to have you with us here. Thanks for your time. The market just continues to chug along very, very nicely. Very few hiccups, if at all, Harsha. And now, of course, we're in the earnings season and the budget, etc., is in front of us. What's your mental makeup as you kind of approach markets, as you continue to deploy? Because, mutual funds are getting enough flows. SIP book is now the highest ever. Just your sense, how you're approaching things, Harsha.
Good morning, Krishna. Clearly, the undertone seems to be quite positive even now. However, we do believe that given the strong performance that we have seen over the past few quarters, there could be a consolidation phase coming in. As far as earnings are concerned, we still expect about mid-teens kind of earnings for this year as well as next year going forward. So overall, there are no fundamental concerns as such. However, the valuations remain high. So to that extent, you'll have to pick your stocks and sectors wisely. So that your portfolio is not very aggressive and you're not prone to too much of volatility in case that volatility starts to show up. That's what we need to do at this point of time.
Harsha, hi, good morning and thanks for joining in. We have so many big events lined up this month, right? It's not even funny. You have the union budget, there are Q1 earnings. There's, of course, the monsoon progress that everyone's looking at very closely. And a whole host of other barometers like auto sales, etc. Do you think the market has enough ammunition to build on to its gains? Is there something in the union budget that can sort of fire up the animal spirits further?
Difficult to say that, Sonia, because most of the positives have already been discounted. The only thing is the government has got additional income in the form of dividend from RBI, which was more than expected. That's close to about 30 basis points of GDP. So whether that will be put to use and what kind of use is something that market is looking forward to. And also there are a little bit of concerns in terms of whether there could be potentially some taxation changes regarding equity as an asset class. If those concerns don't play out and if we see higher investments going into productive investments, I would say that there could be some upside in the very short term. However, the valuations anyways are at a higher end. So to that extent, the base case should not be to expect too much of uptake post-budget.
Okay, hi Harsha, good morning and good to see you, Ben. What about tech? I think a couple of months or so ago, you all were relatively underweight tech in comparison to the benchmark. How are you all placed on IT right now? Because suddenly you're getting some sound bites that are coming in that maybe bulk of the bad news is in the price and maybe you'll not lose too much money on IT from here. What's the view?
Nigel, we also have more or less similar view. We have upped our IT exposure in the recent weeks. Not very much. We still hold an underweight exposure to the sector. But however, we have bridged some of the underweight exposure in this sector by buying into some names. We do believe that there may not be anything very exciting in terms of numbers pertaining to this quarter. However, given how some of the other sectors, which are mostly domestic focused, have performed in terms of stock prices, we do believe that it's prudent to take out some money from those sectors and put it into so-called defensive bets in the portfolio. And IT happens to be one of them.
We were just talking about some of the, we were highlighting Dixon earlier, Harsha, EMS companies. Again, what's the scope is huge and the numbers are going to be big and they're small right now relatively, where they can be 5-10 years down the line, because the focus very much is try and make as much as here as possible, right? Electronics manufacturing. But it's the question of what we're already paying and how much are we discounting, Harsha. So how do you look at it and what are you comfortable with there?
Without getting into stock specifics, clearly there are many areas within industrials and manufacturing, including EMS, where valuations are really expensive. So to that extent, while the medium to long-term growth continues to be very, very strong and could even surprise positively at some places, one has to be cognizant of current valuations and keep some buffer in terms of the firepower that you can put into this particular segment. So what we have done over the last few weeks is we have taken out some money out of industrial, some money out of auto components, and moved that into banking and IT, mostly to make sure that our portfolio doesn't become too aggressive. And in times of volatility, it should also get protected on the downside. So that's the view. And we do believe that within the defensive bets, banking is something probably hasn't performed that well over the last several quarters. And also coming to earnings specifically this quarter, there should not be any significant negatives. So to that extent, it's a good defensive bet. And so is probably IT.
Okay. What about telecom? That's really been where all the action has been over the last fortnight or so. And rightfully so, right? After so long, there are tariff hikes coming through here. Any further upsides in the telecom space that you're looking at?
See, most market participants were expecting a tariff hike, and that has come through. So to that extent, I think whatever was expected by majority of the market has come through. Now the next big trigger would be if there is any more thinking on the AGR and if there is any progress on those lines. Probably that could be another positive. But I think most of the short-term positives are already in the price and valuations have taken care of that.
Okay, Harsha, the two sectors that you liked, one was, I think, auto ancillary and industrials. Let's talk about the autos. What do you like from there? I think you all were leaning towards two-wheelers earlier. How are you all placed right now on autos, and is the preference for auto ancillaries in comparison to autos, or are you going in with a mix of both?
Nigel, as I mentioned, we have taken out some profits out of auto and auto components in the recent times. We are still overweight on the sector, but we do believe that most of the positives in the very short term have been discounted. And also the monthly sales numbers that we are going to see now onwards could be a little subdued compared to what we have seen in the recent history. So to that extent, the earnings trend may not be as exciting as what we had seen in the past couple of quarters. However, we still continue to have an overweight. The bias within auto sector would be towards two-wheelers as earlier, where we believe there is still some money to be made.
Okay, so that's on the auto space. Got it. Before we let you go, I wanted your thoughts, just to understand whether any of these spaces which were fancied over the last 1 to 2 years will continue to see traction, whether it is power financiers, defense, railways, affordable housing, right? I mean, that's been a big focus area for the government. Any of these spaces that you think could continue to gain traction despite the rally that we've already seen?
We clearly continue to be positive on all of this from a longer-term perspective. And also, as we discussed earlier, there is another 30 basis points of our GDP, which is available for further investments into some of these sectors if government intends to do that. I think that's something that could be watched very keenly during the budget announcements. And if that were to happen, then I think some of these sectors can have a lot more growth than what market is anticipating right now, and could be a trigger for further performance from here on.
Got that, Harsha. Thank you for being with us on the show. Appreciate your time, and patience always. Thanks for joining in. Well, for the market, just one quick word. It's not bad, to be honest. It's been a very, very strong week, the last couple of weeks for the market. Holding on to 24,000 with pride and with a lot of strength, resilience as well. The bank nifty is dithering a tad bit, but it's a largely flat start to trade. The next management on the show is IRDA. The stock has actually surged more than 90% in 2024 so far. The company's loan book stood at 63,150 crores, which is up 34% from the same period last year. Loan disbursements have also zoomed for this company. To discuss this, we're joined with Pradeep Kumar Das, who's the chairman and managing director of IRDA. Mr. Das, thanks a lot for joining in and speaking to us on CNBC-TV18. Appreciate your time here. I wanted to ask you about the loans that you have sanctioned, right? I mean, that has gone up almost 4 times year on year. When will these loans be disbursed? And what are the segments that are actually driving the growth for IRDA now?
Very good morning and thank you for inviting me here. First of all, if you look at our growth since last 4 years, growth is continuous and consistent. So nothing surprising. Only thing, if you are comparing the Q1 provisional figure, what we have sent to the stock exchange last night, that appears the sanction on the higher side because the corresponding quarter, the sanction was pretty low. But otherwise, the sanction is quite fair. And when we had done 28,000 crore last year, roughly, and this year having around 5,000 crore disbursement is quite normal in the first quarter. So probably if you go by Q1 comparison, it appears to be some 382% jump in sanction and some 67% jump in disbursement. But disbursement and sanctions by and large used to be in the range of 50% plus percentage. So, and if you see the sector, in general sector growth is there, but yes, we are always a little higher than the sectoral growth because of our strength in our core competency, being the pioneer in this financing space of RE in the country since 37 years. And,
Correct.
The kind of expertise what our team is having, probably others are not having that kind of here. And we understand the importance of country's commitment also.
Correct. In fact, you've been saying that, ad nauseum in different conferences as well, because there is a big renewable energy push that the government has, right? And you are at the epicenter of that. So just trying to understand what is the market share currently, and if there is an investment of 30 lakh crores that we're looking at from the government overall, how much of that pie can you get? What kind of growth would your business look at?
As you rightly said, 30 lakh crore rough estimate of additional investment required, and out of which roughly if you take 70-30 debt equity ratio average, so around 21 lakh crore, 22 lakh crore will be required. And from that, if you see the March statistics, around 50% coming from bond market and 35% coming from NBFC and 15% coming from banking space. And in this 31% of NBFC space is with IRDA. And we are continuing. And the way we have done the sanction disbursement in this quarter, it is confirming that we'll continue to that, having that leading role in the time to come. And in the first question, what you asked, when it will be disbursed. Normally, after sanctioning, it takes 1 month to 1.5 months, depending on the developer's competence and capability. Because we focus on best quality corporate governance also. We are subject to RBI compliance, and so far in last 4 years, our compliance with respect to RBI is best, one of the best among the NBFC and banking space in the country. And remember one thing, we are not only focusing on quantitative growth, we are focusing continuously on qualitative growth. Simple example I'll give. We have submitted the provisional data 30th itself to the stock exchange. And if you see our earlier provisional data and the actual data, there was no major difference in the actual data. And we are planning to again publish the audited result, full audited result for the quarter. Probably that will be fastest in the banking and non-banking space in the country. And already we have completed our AGM on 24th of last month. And this is again first banking, non-banking finance company, as well as first CPSE who could conduct the AGM. So our numbers are growing, qualitative corporate governance standards we are maintaining. So we are happy that we are able to sustain that. And since we have just listed 6 months back, quite a lot of expectation from the market, from us, with fair amount of uncertainty. But we're happy we are sustaining that kind of fastest reporting, qualitative corporate governance standards, coupled with these numbers.
Okay, all right. Hi, Mr. Das. Good morning and good to see you, Vin. So the focus is on growth as well as on maintaining high corporate governance standards, which is heartening. Given the kind of run-up in the stock price, well, the street is anticipating bigger things from you as well. So give us a couple of numbers. For this year, what kind of a growth can we look at? And what does your AUM by the end of this year look like? You have a big target. In the next 6-7 years or so, you're looking at taking it up by close to around 6 times. But in the near term, for this year, what should the AUM look like at the end of this year? And also from the emerging sectors, that you've been talking about, I think it's 25% of your mix. How has the growth been there?
See, emerging space is quite good, but in this quarter, the traditional area is gone up much faster than the emerging one. But if you see the percentage-wise, still we are having around 20-25% in the emerging space, and we'll continue to maintain that because it is not only number, but also we need to sustain the asset quality. So, which is enabling for a lower provisioning coverage ratio. Normally, any rating agency or any audit agency, they look for higher provisioning coverage ratio. But people forget to understand that in renewable industry, when you are commissioning the project at a very shorter period, number one. And number two, post-commissioning and testing of 1 year period of technical parameters, the project is fairly de-risked. Then why you need to make provision for that? So when there is no uncertainty, fair amount of uncertainty is completely removed, then we are not required to make that kind of provisioning. So therefore, our asset quality focus is quite much, and as of now, 2/3 of the assets are commissioned assets, which doesn't require fair amount of provisioning, which enables us to improvise our bottom line. So we're focusing a balanced approach, and new and emerging in any case, the expectation as well as the focus from government, from any developer will be on us, because we are the extended arm of MNRE, and the N stands for new. And whenever new source of energy financing will come, it is quite expected that we have to come forward and deliver. At the same time, being a listed entity now, as well as being the oldest and expert in this industry, we have to play a responsible role, and we have to take into all kind of diligence parameters with respect to the project appraisal as well as robust review and monitoring. And that is our core strength, and we are going to continue that.
Okay, all right. But you have not yet given us an AUM growth guidance number for the year. You want to give us that?
I think always I am being asked, and I always give one answer. We never focus on numbers.
Okay.
We focus on the fundamentals and data is given. And if you, any basic analyst, if they look at the trend in which you have grown, we have never spoken the numbers, but we have always delivered what is expected from us better than that.
Okay, post your Q1 numbers, maybe we'll try to get a rough guidance out of you, sir. But let's focus on a couple of other issues. Reports are suggesting that in the upcoming union budget, there could be an introduction of provisions in 2 PSUs. Namely, the names that have cropped up are IRDA as well as HUDCO. That could be included under Section 54EC of the Income Tax Act. I wanted your view. Have you heard of the same, first of all? And if included, it'll be great news, right?
Not exactly I've heard. It is we who are instrumental in it. We have been requesting our ministry to forward to finance ministry for giving this opportunity to us, because all along the PFC, REC, as well as other infra sector, they were getting this. See, green energy sector per se, despite being a 100% green energy finance company, we do not have any kind of concessional benefit with respect to interest borrowing from the market. At least 54 EC will enable us, and we are confident this time Government of India will look into our request. And I came to know HUDCO has also submitted their request. And since it is government's domain and their decision, I cannot preempt. But since our request is based by solid logic, and if you want to speed up this 500 installed capacity by 2030, IREDA is the core agency on which the entire thing depends. And
okay, so Mr. Das, so this will be great news, right? Because the cost of borrowing will be much lower as well.
Yes, definitely. And if you see in the competitive market, when we're not having the AAA stable rate, still we supported the sector by borrowing little higher and lending at little lower, so that we kept the spread at little lesser, so that the project could become bankable. And that is our strength by which we have grown our loan book in last 3-4 years, and also maintain the asset quality. So again, this 54 EC will enable us reducing the borrowing cost. Plus, apart from that, as I have already told earlier, we have opened an office in GIFT City that is going to be operational shortly. We are following the process, whatever is required. That will also enable us to go for natural hedging. Today, overseas borrowing, when we are doing, we have to hedge, and it is costing around 350 to 450 bips interest. And through that, we can save and go for a natural hedging. That much of hedging cost will be saved, and which we can pass on to the sector. So that is also another where we can reduce our borrowing cost.
Sure. Mr. Das, very helpful actually. You've given us a lot of numbers. So before we let you go, just wanted to check on the FPO plans. What kind of a timeline are we looking at?
See, as of now, Government of India holds 75% of it. And we need equity infusion again, because the way our growth is happening and the sectoral requirement is. So we need to maintain a healthy CRAR so that our stable AAA stable rating is maintained. So we need to infuse further equity. So we are expecting, we have already requested Government of India, and there is a process, and the new government has come in power now. And that process will take some time. So we are expecting between around November to February, if subject to Government of India's approval.
Okay, so you're saying the FPO could come through between November and February, and you need more, you need an equity infusion. So what are we looking at in terms of the quantum of the FPO?
Difficult to say. It is subject to valuation, but we need roughly some 4,000-5,000 crores, which is we are yet to determine the exact number. It all depends on Government of India's consent, how much they are going to allow us to dilute, because now we are having 75% holding of Government of India. With fresh infusion from the market, there will be a natural dilution by GOI. So anyway, that is the domain of DIPAM. They have the authority, and they have to take a call finally how much they will be allowing us. But we require around 5,000 crores equity infusion during this year. Otherwise, at least earlier of the April of next year.
Okay, so you're saying the FPO will happen between November and February. You need an equity infusion of at least 4,000 to 5,000 crores, but it depends on what the government decides. You had a borrowing plan of 24,200 crores, right, for FY25. That won't be sufficient. You're saying you need 4,000-5,000 crores more?
Yeah, see, this borrowing is our debt. Okay, and we need to support equity. If we keep on adding debt, then our debt equity ratio is going to come down, and the CRAR will also come down. So anything below 17, 18 CRAR will not be healthy, and that will be putting a stress on our rating aspect by the rating agencies. And recently, one agency which since 2 years had not upgraded from AAA, AA plus to AAA stable, they have recently upgraded. So, and other two agencies, they are given almost 2 years back. So what I'm trying to tell, the rating agencies were having certain challenges or concern as per their understanding, and finally they have given. And we are also equally responsible in this aspect. We have to ensure the rating agencies as well as the regulators and other external agencies like CAG and other audit agencies, they are quite comfortable with our governance. So we want to have a balanced approach of equity and debt.
All right, we'll leave it there, sir. Great conversation and good to hear, all of the sort of plans that you have. And we'll talk more numbers once the earnings come through for the quarter. We'll take a quick commercial break here. That is the management of IREDA. We'll come back with the management of Happy Forgings and we discuss business outlook with them as well. Stay tuned, that's coming up.
Welcome back. Happy Forgings is the next management on the show. The stock has surged 20% in 2024 so far. And remember, it listed, it had an IPO price band of around 800 to 850 per share. And today, the stock is at 1,235. The company has reported a very strong set of FY24 earnings. And it actually has best-in-class margins as well, much better than some of its peers. So that's something that the street has always liked. We have Ashish Garg, who's the MD of Happy Forgings, who joins in now. Mr. Garg, thanks a lot for joining in. Appreciate your time here on CNBC-TV18. You know, you had a very strong end to FY24. The growth was almost 16% on the top line, and your margins are best in class compared to the industry, only getting better. So just tell us, for FY25 and 26, what is the scope of growth? What kind of top line are you looking at, and what are the biggest, positive triggers for your company?
Thank you. Good morning. Yes, despite of, industry challenges in the last financial year, because farm equipment as well as farm commercial vehicle sectors grew by almost 20% and 8% respectively, company was able to perform far better. We were able to grow 16% in terms of top line, whereas our gross profit margin also improved by 300 basis points, and with the helping us to improve our EBITDA margin by over 22%. So going forward, yes, industry dynamics are very important. It plays a major role, but we have 600 crores of annual new orders, which are in processing. We are able to make inroads into passenger vehicle sector as well, which will contribute meaningfully in the next 2 to 3 years. Industrial sector is doing well, which has kind of improved from 3% to 12% in the last financial year. Exports have picked up from 12% to 20%. So going forward, we expect that, the new projects which are in hand will contribute meaningfully. We are also adding additional 11,000 tons of machining capacity, which recently got completed, which was supposed to get completed by March, but because of the Red Sea crisis, it got delayed by 2-3 months, but we are successfully completed by the month of June. So we are expecting ramp up of this capacity in this financial year. So, besides the growth which will come from the new sectors in the underlying industry, we are also expecting some positive growth because of general elections.
Okay, so that's very interesting what you said, that currently about 40% of your auto business comes from commercial vehicles, but now you're making inroads into the passenger vehicle sector, which would contribute meaningfully. Now, in passenger vehicles, a big focus area has been premiumization, right? Premium SUVs, etc. Do you think there is scope for you to build on to your operational performance once you get inroads into the PV sector? And if yes, from this 28.5% margins, is there scope to take it higher to 30%? Because your margins are much better than many of your peers.
Yes, some of the triggers that we have is if you talk about the PV as a sector, The first project, that large project where we are ramping up now, we were working here for the last 2 years, is from the large domestic auto player. Over there, we have already started ramping up, and we have almost 35% allotted share on this project, which is kind of a BS6 sector that we'll be launching. Plus, in terms of exports, our business is kind of improving from 20% direct exports. We expect to grow to 30% in next 2 financial years. The industrial business that recently company has started in the last 1 year has also moved up to almost 12%, which we expect to grow further to 15 to 18% going forward as well. And that's because of the 14,000 ton line, which is the second largest line in the country, which was added in 2 years back. So considering all this, we expect the gross margin improvement, which was like almost 3% last year. We expect that the gross profit margin will further improve going forward as well by 100 to 200 basis points even in this financial year.
Okay, Mr. Garg, hi, morning. That is Prashant here. You said 35% share, right? That's Mahindra SUVs, where you have a near over 30% kind of share, and as you're saying, you're ramping up. But is it also true that some of the other automakers are preferring to sort of machine their products in-house? So is that a bit of a challenge for you at all, or not really?
Not really, because we are seeing more and more of machining content, increasing for us. In fact, if you see last couple of years, the machining business has kind of touched almost 90% in the last quarter. So if you think about, if we exclude the legacy business that we have, the new businesses that we are picking up are full machine components. In fact, OEMs are also willing to invest with us on the testing equipments, which is a positive sign.
90% of your business, apart from the old sort of forging business?
No, 90% of our business comes from entire complete machining business, which has very high, gross margin and a very high value addition. It's just that 10% of the legacy business is only in forging state today.
Yeah, no, that's what I meant. Now, Mr. Garg, could you give us a sense of how fast that business is growing? The machining business. What were numbers? What could numbers for FY25 look like? Just some sense. And also, I think it's a much higher margin business as compared to the legacy business.
So definitely, as the machining businesses are improving, we have around 30% business coming from farm equipment sector, and farm equipment sector is not a luxury car sector. So if we're able to deliver these returns and numbers on the farm equipment side, definitely the exports and BS6 range of products will definitely help us in boosting our numbers going forward as well. So this, we are already there in a technology shift. We have seen the fastest migration from BS4 to BS6, which is kind of helping us out even in export side.
Okay. All right. Hi, Ashish. Good morning. Nigel on this side. What the street likes is your focus on the cost side. And as per your release that you'll put out, you're looking at a solar captive consumption of power, solar power plant of around 25 megawatt, and you're going to be spending around 120 crores on that. I believe that it's going to be coming on stream in the early part of FY26. So could you give us a couple of numbers? By when do we see the full annual savings out here? And ballpark, what should this kind of an investment save for you? A back of an envelope calculation suggests around 20-25 crores per annum. Is that correct?
Yes. So definitely, there is a change in the Punjab policy. So prior to that, we were allowed to invest only on the rooftop solar. But because of the changes in the policy, now we are allowed to, invest even on the soil. So because of this, we have already planned this investment. It will be range bound 90 to 100 crores and will generate power of between 25 to 30 crores for us. And it will be for self-consumption, and probably it will help us to reduce our cost by almost 200 basis points.
Oh, all right. So, and an annual saving you said will be around 25 crores?
25 to 30 crores, yes.
25 to 30 crores. So that's what we'll see, say, in FY26, FY27 as well on an annual basis from this investment.
We are already in a process to acquire the land, because land acquisition takes time. We will be requiring over 80 acres of land for this. And we are already in the process now. Once we are able to acquire that, then definitely, we should be seeing that coming up in FY26.
Okay, all right. You briefly spoke about your mix and your CV, tractor, off-highway vehicles as well. In pockets, there are some slowdown. Yes, you've increased your export exposure as well, but there are pockets of slowdown. Will that hamper you from getting closer to around 2,000 crores, say, by FY26? Because in a couple of analyst meets, they are expecting you to go closer to around 2,000 crores of revenues. Is that possible by FY26?
See, we already, the industry growth is not in our hands. Despite of slowing down, even in the last financial year, we are able to grow by almost 16% in terms of our top line, despite of raw material prices falling. And at the same time, we are able to improve our gross profit margin as well, which shows that, the machining mix have gone up. So going forward, even for this, financial year and even for the next couple of years, we expect we'll maintain this trajectory because of the new orders in hand. But at the same time, we are looking at a single-digit growth. We are already seeing some green shoots now from domestic farm equipment OEMs. As well as on a CV side, we are not seeing the slowdown, but we will be seeing the single-digit growth. So far, the growth for this quarter has been modest. It is kind of flattish. But next 3 quarters, we are seeing a good growth coming in from both the sectors.
Okay, just one final question from my end on the balance sheet, because you've had a fairly clean balance sheet. I mean, your net debt to EBITDA is just 0.1 times. But, you are increasing your capacity over the next couple of years. You've guided for 900 to 1,000 crores of capex in the next 3 years. Is there any scope to take on more debt as well? And if yes, how much debt are you comfortable with?
So currently, we are sitting on 300 crores of cash in the balance sheet. And it looks very strong. So at the same time, we are also looking at some of the inorganic opportunities also in the space. But on the organic side, we plan to spend between 800 to 900 crores in the next 3 years. And at the same time, we have also formed a subsidiary where we'll be investing into machining, which will kind of help in strengthening our machining business in the domestic market. So it will be, we're waiting for the clearances from the government. And I think another quarter or so, probably we should have it with us. So if that happens, probably our organic capex will probably increase by 200 crores. But at the same time, we have a strong balance sheet. So we are kind of scouting for inorganic opportunities as well.
Okay, so you said that twice, inorganic opportunities is what you're looking at. So in this calendar year, do you plan to close anything? And if yes, what is the geographies that you're looking at?
It will be too early to say because we are not in a rush. We definitely want a quality business and a right synergic fit. So we are not in a rush, but definitely we are open to evaluate opportunities.
Just want to reconfirm the growth number for this year. What is it likely to look like for this year and next year? Because you had given us a qualitative detail on that, but I missed out on the quantitative one. So if you have to guide us for revenue growth in this year as well as the next year, what are you looking at?
So as already explained that, in terms we are looking at, if you're looking at a kind of single-digit growth, because underlying industry also plays a major role in our growth. And considering that it should be upwards of 15%, but a lot depends on the underlying industry as well.
Okay, all right, fair enough. And I think you said in analyst meets, etc., export revenue is small for you as compared to some of the other players, but it'll grow. Export orders are already a large proportion of your total order book, so it'll start to show up in the coming year. So that's another lever for growth. Thank you very much, Mr. Garg. Appreciate you joining in. And good speaking with you here on CNBC TV18. I mean, look at the market go, right? 70 points, 71 points on the Nifty. So there is no stopping this one. 24,080 is where we're at. We're not at the highs that we made last week. That was, I think, on Thursday. And the high we got to was 24,174. So we're basically about 100 points away from, the new high that we made last week, but not very far either. Lots of new names in the mix. There is Garden Reach, which is clearly the big volume-led gainer. It's up 9%. If you can have 3-4 of these stocks up before I go to the next company. Big volumes, big gains. Imami is up 12%. Is huge volumes as well. 770 or so on Imami. And I already mentioned Walk Hard. Raymond is another one which is up 5%. 3,075 on Raymond. And there is something like a Policy Bazaar. Policy Bazaar had that note from Citi that's up about 5.5%, 1473 on Policy Bazaar. Atul Auto had a big move, I think, last Thursday and Friday, and that's up another 12-13%, 700 plus back on Atul Auto coming through here. So just a few names that I just wanted to highlight. Well, real estate developer Signature Global has announced that 2,700 crore rupees worth of sales has happened from its titanium SPR project in Gurgaon. The property offers premium residential units. We'll discuss this and more with Rajat Kathuria, Chief Executive Officer at Signature Global. He's with us now. Rajat, good morning. Great to have you with us here. Thank you very much for your time. Prashant this side. Could you tell us what is the total total value realizable from this particular project? What is the, how much have you done? How much inventory is there? Timeline for when you will be able to sell the rest?
Sure, Prashant. So, Sector 71 is going to be one of the significant, geographies for us, micro markets for us. This lies on the southern peripheral road, which is up to a lot of, development work by various agencies. So we have about, access to about 90 plus acres of land over here, and which will provide us development potential in excess of 17 million square foot. Of that 17 million, we launched about 2.1 million square foot about 10 days back. The response was very good. We've sold almost 85% plus, the units which we had put on launch, and that contributed to about 2,700 odd crores of pre-sales getting recorded within the short span of week to 10 days.
So 17 million square feet developable area. You launched 1.2 million square feet. 85% of, 2.1 you launched, right, out of this. And you sold about 85% of this. So what's the timeline for the development of the rest? Because and can you give us a sense on what is the total value realizable over a period of time?
So, Prashant, speaking more holistically, we are looking at a fairly sustained trend of sales over the last, 4 to 5 years. If you look at our sales trend, we've been growing at a sales CAGR of upwards of 60% odd. And for this particular year, our target is to achieve about 10,000 crores in terms of pre-sales, of which, this project already has contributed about 2,700 odd crores. So, our overall annual target is 10,000 crores, which will be coming out of multiple projects, whether it be Sector 71 or the Sona Elevated Corridor, or, a couple of other locations. But that's the overall target for this particular year. In Sector 71 per se, we'll have like a sustained supply over, a few years to come. This year, our overall target is to launch about 3.5 million square foot in Sector 71.
Okay, 3.5 million square feet in Sector 71. What's the per square foot rate there? And we hear, especially in markets like Gurgaon, etc., these sold out in 24 hours, sold out in 2 days. Is it really true, Rajat? Did you see that phenomenon playing out?
No, that's... market is a little aware because, as we are doing various filings, the market does get to know that, the company is advancing with a particular launch. But yes, I think these are fairly short, within a short span, a lot of sales is getting achieved. And if you look at, the overall market as well, Prashant, let's say, even if we say about 15,000 units getting launched in terms of primary sales in Gurgaon right now, the demand is significantly higher, and that's why you see very quick absorption on good products coming from good quality developers.
Okay,
the price point.
Yeah. Go ahead.
Go ahead.
Yeah, you're going to give us the price point. Go ahead.
Yeah, the price point for this is about 16,000 rupees a foot.
Oh, wow.
Got it. All right. Hi, Rajat. You're sounding fairly optimistic, and body language is telling you as well that things are looking good for the company. But give us a brief number, in terms of what is the token amount when people come to buy these projects, and how does it installments, post that? I want to get a sense about the collection picture. So if you could help us out with that.
Sure. So, Nigel, typically the way the payment plan is structured around this project, or even the one which we previously sold, is about that, about 25% payment is more like allotment come a time-linked plan. So typically on allotment, people will show up about, 9% of the overall, proceeds. So about, initial expression of interest is with some, token amount of, let's say, 10 lakhs odd rupees. And then, within a very short span, once the allotments confirmed, about 9% needs to be around, 9% is paid by the customer. And, thereafter, we'll typically get into the process of registering a builder-buyer agreement, post which, within a span of, 2 to 3 months, we'll, request for about 25% payment from the customer. Post that, it switches on to a construction-linked plan. So the balance 75% of the payment is, basis developmental milestones, which are well defined in the builder buyer agreement. So that's how the payment cycle works for the customers. If you look at the company level, just one additional data point. So as our sales are growing, we are also witnessing a strong sales and collection numbers as well. So last year we collected about 3,100 crores, and this year the target is to collect about 6,000 odd crores. So you could say there'll be some lag effect between pre-sales and collections. But since these are all sort of, time stroke construction linked plans, collections tend to, reflect the, quality of sales or the seriousness of, customers who are buying these units. And in our scenario, both pre-sales and collections are, trending upwards on an yearly basis.
Okay, so I want to know a little bit about your balance sheet as well, Rajat. Your net debt has increased recently because of the land acquisitions. So I want to know, by the end of FY25, what will the debt be, and what are the current debt levels?
Sure. So see, as of 31st of March, our net debt was around 1,150 crores. This was despite us spending significantly more amount on land acquisition. The entire Sector 71 land acquisition happened through the course of the previous year. Most of it is owned land. There's a smaller portion of land which is under collaboration. Despite that, our net debt was 1,150 odd crores. The guidance which we've given for the current year, Sonia, is that by the end of the year, our net debt number will be less than 0.5% of the operating surplus. You could call operating surplus to be a little akin to, EBITDA, not exactly EBITDA, because, accounting is more back-ended, in real estate. So we can't really do a debt to EBITDA, but, we tag it to operating surplus. And, the entire net debt will be less than 0.5 times an yearly net surplus, net operating surplus for the company. So we are very comfortable on the, leverage levels of the company as of today.
Got that.
Just one more question, if you will.
Sure.
Are you now going to look at only premium, or because when you started, you were you started on the affordable side. So have you also now pivoted completely, or what's the plan?
So, Prashant, if you look at the previous year, we sold about 4,600 odd units at an average, unit ticket price of about 1.6 crores per unit. So that's how, we clocked about 7,300, close to 7,300 crores of pre-sales in the previous year. We'll continue to play across the spectrum. So starting with, mid-income homes, which you could say, in our definition, let's say their starting point is about 1.25 odd crores, and going up to premium segment where products are priced, let's say on an average about 5 odd crores. So we intend to play the entire spectrum. And while there's some bit of competition, we are seeing on the premium side, with, more developers coming in, that mid-income segment where we'll do a lot of supply in this year and are hopeful of good absorption. There's very little competition. So we'll play the entire spectrum, to answer your point.
Okay, we will let you go on that note. Thank you so much for joining us, and all the best with your business. That is the word coming in from Signature Global. It's been a very strong performer, actually. In the last 6 months, it's up 65%. But don't lose sight of the market. Once again, doing her thing. The mid-cap index up 330 points now. So big, I mean, it's been a raging bull market so far, and it's something that continues today as well. Soni Patnaik is joining in. She's the Assistant Vice President Derivative Research at JM Financial Services. Soni, hi, good morning. I mean, this is really a pretty looking screen on our hands. The mid-cap index is now up, almost 330 points. What are the stocks that you're looking at this morning where one can still buy despite the rally?
Hey, good morning, Sonia. Thank you for having me on the show. I think Nifty is holding quite strongly above 24,000 on closing basis. And from June to July series, we've seen quite aggressive long rollovers for Nifty. So there could be a bit of a times consolidation for Nifty at in the range of 23,800 to 24,200. But ultimately, it can test 24,500 for the series. So the stock-specific action is also going to be on the longer side. The first pick comes in IEX for today, which has given a good breakout above 185 in option chain. And also there's a good intraday charts breakout. So IEX at current level, one can buy keeping a stop loss of 181 and a target of 192, 194 can be seen for a positional play. The second pick comes from the metal space, Nalco. It has also looking quite strong with a fresh breakout above 190 today. And on charts also, it has given an intraday breakout. So keeping a stop loss of 180.75 and a target of 206 can be seen in Nalco.
Okay, thanks a lot for that. So let's do one thing. Let's take a quick break on that note. On the other side of the break, we'll also find out what's been
Okay, welcome back. The market's up, 45 points. There is a bit of a pullback which has happened from the day's highest point, but still green on the screen. Manisha is here with what's top of mind for commodities. Manisha, morning.
Well, thank you for that, Prashant. It's a day that we have started on a positive note for many of the metals. But what I'm looking at really early is silver prices. We've seen all-time highs in case of silver in this year. I want to take you through on what we've done in sense of prices this year. So in the month of June, we've seen a 4.8% of a decline. But as you can see, the last 3 months have given you very strong returns in sense of silver. We started the year slightly on a weaker note, but since then, it has been a 5 to 14% of gains coming in for the silver prices every single month there. Also, when you look at the last few years, it has been good going for silver. This year, until now, we are up by 17%. So last 3 years have been great. 2021 was an 8% of a decline, but 45% of gains is what we saw in the previous year. So silver in that sense also has been giving very strong returns. It is has been an outperformer within the metal space as well. And for various other asset classes, when you compare it to that too, silver clearly seems to be doing quite well for itself. When you look at the Indian silver imports then, and India is one of the largest importers of silver, last year, the whole of year, India imported 3,600 tons of silver. This year, until the month of May, we have surpassed what we imported in the previous year. So we stand tall until the end of May at 4,091 tons. The expectation is that for the month of June as well, the numbers are going to be quite strong. When you look at the Indian silver demand itself, there is investment demand. Most of the people anticipate that silver will continue to outperform. We already have seen a silver price of all-time highs of 96,500 with an expectation that a lakh rupees is what you could see perhaps by the end of this year. And then there is very strong industrial demand also. While most of you would have woken up to those headlines coming in newspapers that India is going to talk to UAE in sense of huge imports that we've seen continue from that country. Well, when you look at the Indian imports, the silver import duty stands at 15%. But when you are importing from UAE under CEPA via IBX, the import duty that you pay is 9%. So there's a huge difference of that 5 to 6% is what the Indians really seem to be making use of. Almost 45% of silver imports that India is doing is currently coming in from UAE, and there are some conversations that are anticipated onto that one. Having said that, as I said, it has been strong gains continuing for the silver prices. This week as well, it is going to be the Jerome Powell speech on Tuesday. On Wednesday, you have the US Fed meeting minutes, and on Friday, you have the US non-farm payroll data. So it's going to be quite an eventful week in that sense, and various cues to take that from.
Okay, well, thanks a lot for that, Manisha. Let's do one thing. Let's take a quick commercial break. On the other side, our special segment, It's the Economy. Lata will get chatting with Ashish Gupta of Axis MF to put focus on the money markets post India's bond inclusion in the JP Morgan Emerging Market Bond Index and the rise in equity derivatives volume. Stay tuned.